Hi, everyone. Welcome to our 12-part series, Inside the One Big Beautiful Bill Act. I'm Kenny Birch, a tax director in our mortgage banking tax practice. And throughout this series, we're breaking down the most important tax changes under OB3 and what they mean for you. These updates can have a real impact on planning, compliance, and your bottom line. So if you want to stay ahead and make informed decisions, you're in the right place. Now let's take a look at the updates to fixed asset expensing under sections 179 and 168K that could impact your purchasing strategy with Alex Holloway, an expert in our mortgage banking tax practice.
Hi, Kenny. Yes, today I'm going to be talking about changes to the way that companies can record their fixed asset purchases. Specifically, there are two laws that were changed. Those are sections 179 and 168K of the tax code.
Thanks, Alex. Can you give us some background on tax rules under 179 to start us off?
Yeah, so according to Internal Revenue Code Section 179, taxpayers can elect to treat the cost of certain qualifying business property, referred to as that 179 property, as a deductible business expense rather than a capital expenditure.
Awesome. And how do those two treatments differ?
So if you treat something as a capital expenditure, you spread the cost of that asset over a certain period of time. So let's say I bought like a truck or a vehicle for my business. I'd have to add back all of that expense to my income, except for the calculated portion of expense I'm able to take in that year, referred to as depreciation. So with eligible Section 179 assets, you're able to essentially front load all of that expense in that year by taking the full cost of that vehicle the year it's placed in service.
Great. What types of property qualify as 179 property?
So 179 property generally refers to the cost of new and used tangible Section 1245 property used in the business. Think, furniture, machinery, and equipment. There's also some qualified off-the-shelf software that also qualifies for Section 179 deduction, even though it's a software which is, an intangible asset.
Great. What changes did the enactment of OB3 make to the treatment of these 179 assets?
Yeah, so there's always been dollar limitations built into 179 on how much deduction you can take in a given year. For tax years ending before 2024, the dollar limitation on deductions was $1 million. For 2025, that number has increased to $2.5 million. And also baked into 179 is what's called an investment limitation, which essentially every dollar you spend above that limitation on 179 eligible assets would reduce the amount of 179 expense you could take dollar for dollar. The investment limitation was raised from $2.5 million to $4 million in 2025. To illustrate this investment limitation, basically, if I spent $6.5 million on 179 eligible assets, that $2.5 million deduction would be reduced to zero.
Wow. Yeah, those are definitely some big changes, Alex. What kind of implications can this have for our clients?
Oh, you can see this change as an incentivization to purchase assets to be used in the course of your trade or business. 179 is already a taxpayer-friendly tax provision, and now with those limitations being practically doubled, you'll have a lot more headroom to make expansions and not take a hit on your taxes.
That sounds great. Earlier, you mentioned Section 168K. Can you give us some background on that law?
Yeah, so Section 168K deals with bonus depreciation. Bonus depreciation is an additional first-year depreciation allowance claimed on certain new and used qualifying property. It generally applies to maker's property that has a recovery period of 20 years or less. I like to think, these two provisions, bonus and 179, I like to think of them as two consecutive dams. If your fixed asset expenditures in a year exceed, either the dollar limitation or the investment limitation built into Code 179, if it goes more than that, that spills over and it could be met by that second dam, which is bonus depreciation.
Can you tell us how bonus depreciation works?
Yeah, so essentially, bonus depreciation is another method of front loading your depreciation on a given asset. Continuing the example from earlier with like a vehicle or a truck, assuming you've met the 179 limitation and you still have assets that were purchased in the current year, bonus depreciation allows you to take a certain percentage of that cost as an additional deduction to what you normally be allowed to take via the standard maker's depreciation and or the 179.
Okay. And how did the enactment of OB3 change these rules for bonus depreciation?
Yeah, so in previous years, there was a phase out to bonus depreciation. For assets placed in service during 2024, you were limited to 60% bonus depreciation. And then in 2025, you could take only 40% and so on until a full phase out in 2027. Now with the changes, the permanent amount of bonus depreciation you can take on a qualified piece of property acquired and placed in service after January 19th, 2025 is 100%, and all phase-out provisions have been eliminated.
Why do these changes matter for taxpayers?
Both these changes taken together have effectively removed most of the limitations on the amount of depreciation you can take each year. There are, of course, still limitations in place on what counts as qualified property, but the amount you can expense each year has increased dramatically.
Awesome. And Alex, what would you encourage people to watch out for in relation to this change?
I'd say definitely be up to date on what assets qualify for these types of depreciation and which ones don't. The last thing you want to do is buy a large amount of property only to find that a portion of it doesn't qualify for either 179 or bonus depreciation. Also, another thing to note that if you are expecting tax losses, there are certain elections to opt out of that bonus depreciation if you desire.
That's great information, Alex. As we wrap up, I know we've talked about both sections 179 and 168K individually, but can you give us a more in-depth analysis on the differences between these two provisions?
Yeah, for sure. So one important difference, we kind of talked on them a little bit earlier, but yeah, just to lay them out. One difference is that bonus depreciation generally applies to property that has a useful life, what they call it, of 20 years or less. 179 applies to all assets, doesn't matter their useful life. That's a big difference. Also, bonus depreciation can be claimed on both real and personal property, whereas 179, that's only personal property. But I mean, there's very limited exceptions to that where you can apply 179 to qualified real property. And also, just again to reiterate, there are limits to the 179 expensing that we talked about, the dollar cap, the investment cap. There's also a taxable income cap that we didn't talk about. But those are, very important parts of that. Whereas with bonus depreciation, you don't have to worry about any of those limitations.
Thanks, Alex. I know there was a lot there, but I really appreciate you joining us to share those insights on fixed asset expensing. For more updates that could impact your business, check out the other videos in our series.